afternoon and welcome to today's webinar hosted by the National Network of Credit and Financial Professionals. I am here today with Mary Hughes, Senior Payments Information Consultant at the Federal Reserve Bank of Minneapolis. A few items to get out of the way before we begin. If you have any questions during the course of the presentation, you can ask them through the questions function on your side panel. We will gather all those questions and save them for a Q&A at the end of the presentation. If you're looking for a copy of the slides to follow along today, they are available through the handout section in your side panel. We will also be sending a copy through email after the presentation is complete. The last item is that we will have a brief survey that pops up after the webinar ends. It only takes about 30 seconds to fill out, but it gives us a lot of great information on how we can continue to make our webinars better for you. Now, Ken Frisco will give you a brief intro of our speaker.
Okay, thanks, Sharon. Mary Hughes, a senior payments consultant in the Payments, Standards, and Outreach Group at the Federal Reserve Bank of Minneapolis, provides analytical and research support to senior managers engaged in payment policy and related issues. Mary assists in coordinating the Federal Reserve's participation in the U.S. and international payment standards organizations. She is the former chair of the Accredited Standards Committee, X9C, Corporate Banking Subcommittee. Mary is active in the Business Payments Coalition and participates in work groups developing a common business processes and practices in support of greater usage of electronic payments and remittance exchanges. Mary joined the Federal Reserve Bank in 1985 and has worked in marketing, business development, market research, marketing communications, electronic payments, sales analysis, and payments information consulting roles. At this juncture, I'd like to turn it back to Mary to begin her webinar.
Well, thank you very much, Ken, and thanks to everyone for spending time with us today. And I want to extend my appreciation to the Federation of Credit for this opportunity. As you probably surmised from Ken's introduction, I've been involved in the Federal Reserve and in payments for many, many years. And even though our payment system is evolving in very many exciting ways, one thing seems to stay the same. Paper checks continue to be a mainstay in the business-to-business or B2B payment space. Remember that old song, "Breaking Up is Hard to Do"? For many small businesses, breaking up with checks is hard to do too. This webinar is going to focus on how larger trading partners can reduce the pain points for small businesses that insist on sending and receiving checks. We all recognize that checks are costly, labor-intensive, and prone to fraud. You'll learn about a free resource developed by the Business Payments Coalition, which is a volunteer group of organizations and individuals working together to promote greater use of electronic B2B payments and remittance exchanges. We will feature the Small Business Payments Toolkit, which has been downloaded over 34,000 times. The Toolkit is a free resource. It provides basic, plain language education intended to encourage the adoption of electronic payments by small businesses. We hope that you decide to share this practical guide with your smaller business trading partners so that they can understand the benefits of electronic payments and kick their check habit. Today, we're going to address how to help small businesses overcome obstacles they may face when they start sending and receiving electronic payments. And as Sharon mentioned, submit your questions throughout, and I will address them at the end. Today's webinar is divided into 5 sections. First, we're going to talk about what's in the toolkit. Second, we're going to focus a little bit on how payment types are explained in the toolkit. In the third section, we'll discuss the benefits of electronic payments with a spotlight on ACH and also on how to persuade smaller trading partners to give up checks. The fourth section will offer some tips from the toolkit on how small businesses can work with their banks to improve payment efficiency. And then the final section is going to talk about payment security best practices that small businesses and really everyone can follow to avoid fraud loss. I should give a mandatory disclaimer here. The opinions that I express today are my own and not those of the Federal Reserve Bank of Minneapolis or of the Federal Reserve System. And some of you might be wondering, well, why is someone from the Fed giving a presentation like this? I want to tell you why. As the U.S. Central Bank, the Fed's mission in payments is to foster the integrity, efficiency, and accessibility of U.S. payments and settlement systems in support of financial stability and growth. And since business-to-business payments are such a vital part of our economy, we do a lot of work to help improve payments efficiency in that B2B sector. So let's first talk about what's actually in the Small Business Payments Toolkit and what it is. First of all, you can download it for free at the fedimprovements.org website that's on this slide. And the toolkit came about because a group of volunteers from the Business Payments Coalition wanted to try to help educate smaller businesses because they tend to really rely on checks as their favorite form of payment. And there are many reasons, as we will explore today, on why that isn't such a great payment choice. So the group of volunteers that created the toolkit was made up of a couple dozen people from banks, the National Automated Clearinghouse Association, various sizes of business, vendors, technology and service providers, and members of the Fed. And I served as the project manager on the toolkit. What we're very proud of is that the toolkit expresses its ideas in very plain language and takes a very common sense approach. The entire document is only 45 pages long, so it really is an easy read. And to make it even easier to find information you want, the toolkit has a searchable table of contents, so you can just click on a topic that interests you and get sent directly to that page. So the action item that I hope you take on yourselves today is that you'll download the toolkit and you'll share it with your colleagues and with smaller business trading partners. Hopefully many of you have already heard of the Business Payments Coalition. It used to be called the Remittance Coalition. This organization has been around for over 5 years, and we here at the Federal Reserve Bank of Minneapolis have helped to administer it and support it in that time. People that belong to the Business Payments Coalition have day jobs too, so they are very busy people, and their help on the various work groups that the Business Payments Coalition forms is very much appreciated. The mission of the BPC is to work together to solve problems associated with B2B payments in order to promote use of electronic payments and electronic remittance exchanges. And all of this is in pursuit of the goal of straight-through processing. What does that mean? Well, straight-through processing means the ability to receive and process B2B financial transactions from start to finish using an electronic system without human intervention of any sort. It also means that information is easily and quickly transferred between all parties. And finally, straight-through processing is characterized by fewer delays that come out of slower, inaccurate, or inefficient communication of payment-related data using manual processes. And STP, as we call it, is important because it is the key to improving efficiency in the B2B payments area. The toolkit is now in its third version. We last updated it in, I believe, April of 2017. The toolkit starts out by giving the reader some basic education about what the different payment types are. It moves into understanding ACH, including a section on same-day ACH. It offers tips on working with your banker. There's a very robust section with fraud prevention and mitigation tips. We have a section on what small businesses should know about accepting cards and also about EMV or chip cards. There's an article on business continuity planning and much more. The first part of the toolkit contains educational information explaining about the different types of payments in use today. Now, I'm assuming that people on this webinar, based on the association, are probably very knowledgeable about payment types that are commonly used by businesses. But I'm going to give you just a quick review so you understand what's in the toolkit. A payment is, of course, a transfer of value from one party, the payer, to another, the payee. And in addition to cash, which we do not cover in the toolkit, the most common means of payments used by businesses are checks, ACH, credit and debit cards, and electronic funds, also called wire transfers. The toolkit covers these, plus internet bill pay and what we call alternative payments, and I'll say a little bit more about those in a second. So working clockwise from the top, ACH, the red bubble there, stands for Automated Clearinghouse. Transactions are processed in batches instead of as single items, which is the case with, say, a wire transfer or a check. ACH can be settled in a 1-day, 2-day, and now a same-day time frame. ACH is typically used for things like direct deposit of payroll, direct debit of recurring bills, and various other use cases. The ACH is an electronic payment network that can be used to push funds via an ACH credit or to pull funds via an ACH debit. And the toolkit describes credit and debit ACH items in some detail and also explains about popular use cases of each. You may be aware that NACHA, the organization that sets rules for ACH, recently had a request for public comment that was issued in December. NACHA asked for industry feedback on 3 things. First, adding a third same-day ACH processing window with settlement at 6:30 p.m. Eastern Time. Second, providing faster funds availability to receivers of both same-day and traditional ACH entries. And third, raising the per transaction dollar limit for same-day ACH entries from $25,000, which it is now, to $100,000 per item. The comments on those are in, so you can go to nacha.org and see what people said. And they currently have another public comment out in which they're seeking feedback on whether there is industry support for making ACH processing available on weekends and holidays. So if you're interested in commenting on that, you can. Moving along to the next payment type, internet bill pay is covered in the toolkit. Even though it's not really a payment method explicitly, we covered it because it really does give small businesses a way to pay bills by asking their bank to make a payment on their behalf. The bank, in turn, will either write a check or make an ACH payment to pay the bill. I should note that non-bank providers also offer internet bill pay services. For example, some businesses receive electronic invoices over the internet, and they then use a bill pay service to route those bills for payment and processing. The purple bubble covers credit and debit cards, which we all know are extremely popular in the U.S. Americans love their plastic. A credit card allows cardholders to make purchases or get cash advances using a line of credit granted by the bank that issued the card. And a debit card allows the cardholder to make purchases or withdraw cash from their own checking account. Wire transfers electronically transmit funds intra-day, meaning that the payment is initiated and settled on the same business day. A wire transfer is an unconditional order to pay a certain amount to the beneficiary upon receipt or on the day stated on the order. Funds are irrevocable, meaning they cannot be returned. Funds are immediate, with wires only taking a few seconds. And then alternative payments, small businesses can think of alternative payments as payment methods that exist outside the mainstream legacy payment channels, which I would think of as checks, ACH, wires, and card payments. Most online and mobile innovations focus on consumers, but business services are also gaining traction. Mobile and online payments, which are covered in the toolkit, are mainly new ways to access existing payment structure. that is cards and ACH in terms of final settlement. The toolkit gives examples of how PayPal and Square work, and these are essentially systems that allow small businesses to accept online payments without having a traditional merchant account. The next edition of the toolkit, which I expect we'll start working on in 2019, will include much more in the alternative payment section. Specifically, it will add information on real-time payments, and we'll talk about P2P or peer-to-peer payment systems that small businesses may find useful. So the toolkit walks the reader through each type of payment and spells out the pros and cons of each one. And just to give you an example, you can take a look at this slide here. For instance, business checks are seen as advantageous because they're widely accepted and because you don't need to know the bank account numbers for the individual you wish to pay. On the bad side of business checks is that they're subject to a great deal of manual handling and there is a greater fraud frequency. ACH pros include that the fees are lower once you're set up for ACH, there's a higher level of automation and fraud typically is much lower. The disadvantage of ACH is that an ACH credit is not final until settlement and that you need to have a routing and transit number in order to process an ACH payment. That is, you need to know the bank account number of the individual or business you wish to pay, and you need to know that individual's personal checking account number. So you can see from the slide that there's pros and cons of each payment type, and the toolkit attempts to educate someone so that they can first learn what how the payment is defined, and then consider, well, what's good about this payment, and then on the flip side, what are some disadvantages that I also should consider. So debit and credit cards are kind of lumped together because they are sort of the same instrument. The primary con with using the cards is that interchange fees have to be paid by acceptors of cards, and there's also potential fees if for some reason there's a chargeback or reversal. So it just helps to open someone's eyes to understand what's involved when comparing these different payment types. We all know that checks are embedded in the payment processes of small and medium-sized businesses. The data shown here is based on 572 responses from a survey of small and medium-sized businesses. That's what the SMB stands for. Nearly all of them, 96%, use paper checks to pay face-to-face or remotely. They admit to spending on average 60 hours a year writing checks. It costs an average of $7.15 to process a paper check, according to these survey respondents. And once they tally up all these expenditures, the annual cost of checks written by small and medium-sized business represents a societal cost of $14.1 billion a year, which is really, quite significant. On the right-hand side, that bar chart tells us that while checks are the most popular payment used by small businesses, credit or debit cards are used by 63%, ACH or direct debits are used by 6 in 10, and then cash is used by a little less than half. To determine the current state of electronic B2B payments, Paystream Advisors surveyed 300 individuals from a variety of industries and organization sizes. And this rather busy chart tells us how check proponents, card proponents, and ACH proponents view various challenges that are related to payments processing. I want to call your attention to the black arrows because they call out the answers from the strong proponents of checks, which is shown in that blue bar there. People that use a lot of checks are much more likely to say that losses from fraud are a challenge compared to those who favor cards and ACH. Check users also identify late payments as a pain point, and they cite missed discounts as a top challenge. And although heavy check users in this survey didn't view high processing costs as a challenge. In fact, checks really can be quite costly. For example, the Association for Financial Professionals found that the internal median cost of initiating a check is $3 versus only 11 to 25 cents for an ACH item. That's the median cost. And recall that that last slide I just showed you claimed that it cost an average of $7.15 to process the check. This chart shows how businesses view the benefits of each of the common payment types. And I think it's insightful because it makes me think about the various reasons why businesses choose one type over another. Directing your check to the blue bars, which represent checks, checks are perceived as having the highest acceptance by suppliers. You know, they're ubiquitous. Pretty much everyone except Domino's takes them. Other attributes of checks in the eyes of these businesses are that checks offer the most complete remittance information and are seen as easiest to integrate with the accounts payable system. ACH, shown in pink, is perceived as the least costly. 57% of these surveyed respondents said ACH best represents that attribute. ACH is also viewed as offering the best fraud protection. Wires in green down at the bottom there, the last bar, is considered best for international payments. Cards, shown in violet on the right-hand side of the bars, tie with ACH as being the most convenient, and cards in ACH are also viewed as best for working capital management, with cards slightly favored based on that attribute. Next, we're going to think about why electronic payments are beneficial. Larger corporates, which are represented by the tan bars in this chart, say ACH is their most preferred payment method, followed by wires and then cards. Now look at the blue bar, which show the least preferred method favored by large corporates. And that, of course, is checks. Checks are clearly the least favorite payment type in the eyes of larger corporates. So larger corporates see the light, and they are moving away from writing checks. How can larger businesses convince their smaller trading partners to do the same? The Toolkit seeks to educate small businesses on why heavy reliance on checks is not a good idea long term. Clearly, there will be reasons for writing checks. The idea is to educate small businesses that maybe they should, add other things to the mix. There's some pretty compelling reasons why small businesses should think about using payment types other than check. The big one is check fraud. It's very easy to perpetrate check fraud. The barriers are low and the costs to entry are low. Unfortunately, when you write a check, your bank's routing and transit number and your personal account number are out there for everybody to see, everyone who touches and handles that check. We see that check fraud is not going away. We continue to see counterfeits, alterations, even check kiting. The disadvantages of checks are that it's so expensive in terms of staff costs and labor to create checks and process them. They make the businesses vulnerable to fraud. They lead to unpredictable cash flow and poor visibility. There can be a risk of late payments because they don't get there in time, and also because the timing is uncertain, businesses may miss out on early payment discounts. A banker who specializes in serving small businesses provided the information for this slide. He told me that these two arguments are very effective in persuading his smaller clients to stop writing so many checks. First of all, he demonstrates to them that if they would switch to ACH, wire transfers, and or cards, they could improve their cash flow. That using electronic methods leads to a predictable and managed posting of transactions. And very importantly, it allows you to take advantage of discounts on invoices. He also uses this second argument that a business that relies on electronic payments has a tool ready to impose requirements on slow paying customers. So rather than just give up the product and hope that a payment comes in, they can make the payment due before the product is delivered. And I think another compelling third point is that using electronic payments will definitely free up staff time and management time for more productive work. Although this next bar chart reflects data from a survey of large businesses, it helps us understand what motivates businesses to use electronic payments instead of checks. Basically, they're looking to increase efficiency, reduce costs, prevent fraud, facilitate straight-through processing, and enhance remittance information handling. These same benefits will accrue to smaller businesses as well. You know, it's just human nature to ask, well, what's in it for me when you're presented with a change that someone else wants you to do. To motivate businesses to consider paying by electronic alternatives other than checks, savvy suppliers know they must make it worthwhile to their customers by dangling incentives in front of them. And as an example, I want to share a case study of one large corporate. The large food service company, Performance Food Group, has been very successful in persuading its network of small mom-and-pop convenience stores or street accounts to allow a direct ACH debit to their accounts in order to pay Performance Food Group for various food and beverages that it delivers to these convenience stores on a regular basis. So PFG starts the conversation by asking questions like, do you realize how expensive checks are for you to write? Would you like to reduce your back office expenses? What if we could guarantee no credit holds on your orders? And they also asked their smaller customers, would you find it helpful to have better working capital management? What if you were certain of the withdrawal date of funds from your bank account? So these mom and pops are willing to provide PFG with their bank and account information, which then enables PFG to initiate ACH debits to obtain payment on specified dates. And so what they do is they'll have a cycle that will range from weekly terms to net 30-day terms and beyond. And they work with the individual customers to determine what their preferred payment cycle is. And the particular day of the week that the ACH debit hits the customer's account is based upon terms of sale, but very importantly, can be negotiated. So maybe a customer's regularly scheduled debit day is Friday. However, this particular Friday is payroll day, and the customer says, well, I need to deposit my weekend credit card receipts to fund the account, let the debit hit my account on Monday. Well, PFG is willing to work with them to be flexible in that regard. And that flexibility, plus the long-term trusted relationship they have with these regular customers, is key to the success of their ACH debit program. And the incentives that they offer are pretty compelling as well. They let their customers opt for variable payment dates, as we just discussed. They let them earn discounts on the amount owed to the supplier, with higher discounts given for choosing shorter payment cycles. They offer to bundle invoices from multiple deliveries in the same billing period, with one debit paying all of them. They tell the convenience stores that they could potentially receive better terms than allowed with predictive credit scoring models. They also tell them they will receive an email with the payment and remittance information 48 hours before the ACH debit hits the account, so that there are no surprises. And finally, by using this payment method over time, the convenience stores have an opportunity to earn excellent credit references with the business credit reporting agencies. So, excuse me, all told, this program of the ACH Debit Program Performance Food Group has been working out really well. When we first created the toolkit, the work group spent a lot of time and effort building the case for why small businesses should use ACH and how can we help them get started. So you'll see a few pages devoted to ACH in the toolkit. And the next three slides I call Spotlight on ACH, because I want you to get a sense for the type of information on ACH that you'll find. We have an article called What Small Businesses Should Know About ACH that basically defines what it is, explains why it's an attractive payment option, highlights important considerations, gives use cases, because some people, they just need to hear practical examples of how you would use a payment method in order to understand it. And then, of course, they cover the main benefits of it. One way to initiate the conversation with a small business is to acknowledge that many small businesses already understand ACH's role in direct deposit of payroll, but they may need more education to understand why they should expand beyond that use case and possibly use ACH for other things. So first-time ACH users need to understand the implementation issues. How will they originate ACH? Will it be in-house, or can it be via a third-party vendor, and how would that work? They need to know that being set up as an ACH originator will likely require underwriting, which allows the originating bank to establish an exposure limit for the business and hence limit the risk of the bank. And because the small business has to know the bank routing number and account number of the party to which they're sending the ACH debit or credit, a new ACH user has to learn how to manage and secure the payment identity of each payee. And I should add that, some small, really large businesses, they don't really offer gentle nudges or persuasion to get their small suppliers to accept ACH payments. They simply require it. But if your organization is not of that ilk, you may find some of these suggestions worthwhile. And then recognizing that many small businesses do not have a robust IT department or staff. They may need to look for a vendor to outsource the creation of ACH files. And the Toolkit has a really nice informative analysis that explains the various factors that should be considered when hiring a vendor to perform this function. And it covers the important topics listed on this slide. Moving on to our fourth section, the Toolkit urges small businesses to collaborate with their bankers to save time and money on payments processing. Partnering with banks can also improve payment security and help small businesses avoid being victims of payment fraud. An aha for many small businesses is that they can partner with their bank and rely on their bank for help in converting to electronic payments. And the Toolkit has a lot of common sense advice regarding this. We tell small businesses to be proactive, to contact bankers themselves to ask about how they can improve their payment processes. We tell them to shop around, that the current bank that they have might not be the best one, and there may be better banks in their area that are more tuned into the needs of small businesses. We also tell them that even though the loan officer may be the person at your bank, they may not be the right individual to help you improve payments. You may need to seek out other experts. The Toolkit explains what information a small business should bring to the meeting with the banker, and we tell them they should ask their banker to explain the best payment options. A very key piece of information in the Toolkit is that many banks offer risk mitigation services, and many of these services are free. And so if they want to sign up for fraud prevention tools through their bank, they should learn about what's available and avail themselves of it. The Toolkit explains that prices can be negotiated, that bankers can be very knowledgeable about workflow and control issues that they may need to address, and also that bankers can help give them excellent advice on how to manage the payment identity of each payee. Small businesses are also told to learn more about online bill pay, using remote deposit capture, and also that if they're not currently accepting payments via credit or debit cards, they should learn how to do that. The banker may be able to help a small business establish a merchant services account. In addition to or instead of traditional card acceptance like that, the Toolkit explains that small businesses may want to use a device such as Square, PayPal Here, or Intuit Go Payment, which attaches to a cell phone and then allows them to turn their smartphone into a card acceptance advice. New in the version 3, the most recent version of the toolkit, is the self-assessment quiz, and its purpose is to, it comes at the end of the document, and it helps test the reader's readiness for electronic payments. So they can answer the question, and if they're not sure of the answer, that little section underneath each question refers them back to the page of the toolkit that will provide information on that topic. I'm getting to the final section of our webinar, and that covers payment security best practices. What steps should a small business, and really every business, take to help mitigate risk to payment fraud? There are no silver bullets. Risk management requires multiple layers of security and implementation of multiple methods to protect against fraudsters. And the toolkit has a lot more detail than what I'm going to share in the webinar here. When fraud occurs, businesses can be held responsible for lost funds. Liability for payments fraud is quite complicated, and it's governed by laws, regulations, and/or private contracts. Businesses have way fewer legal protections than consumers, and to a really small business, this can be kind of a shock to learn that the protection they enjoy as a consumer is not as wide or as strong as the protection is wider and stronger rather than the protection they get as a business. Liability is going to vary by payment type, and the bottom line is that it's going to, if funds are actually lost, it could take a lot of time and effort to recover the funds, and they may not be successful in doing that. So for this reason, prevention is emphasized. The toolkit contains a section of effective fraud mitigation techniques for each of the payment types. So because small businesses rely so heavily on checks, we explain ways to avoid being victimized by check fraud. This includes implementing a regimen of strong internal controls, the critical point of reconciling your bank accounts daily, to always address exceptions and make timely returns, and to not concentrate too much power in one employee. In addition, because of all the paper associated with checks, readers of the toolkit are told they should secure all check stock, that they should employ a secure destruction process for paper, and that again, they should rely on tools and services that their bank or other providers that may offer, such as these positive pay type products, which are described in detail in the toolkit, post-no check restrictions, and point-of-sale check fraud detection services. Education and training of employees is also key, as well as just not writing so many checks. Common frauds on purchasing or P cards and debit cards issued to employees typically are employee misuse or attempted use of lost or stolen cards. When they get their hands on a stolen card, fraudsters may ping an account with a small purchase to see if the transaction goes through before they escalate the attack. And so how should a small business prevent fraud on cards? The first common sense thing is to only give cards to employees who need them. In my department, we have one person who serves multiple departments that orders staff, equipment, and supplies on behalf of the various departments. I don't need a P card for my occasional supply needs, and I don't have one. Also, it's important that the human resources area of a small business establish policies and checklists for what should be done when an employee leaves the company. And this should include notice to the card administrator of departing employees to cancel the cards. Monitoring transaction activity is also really important. Managers should be required to review purchasing activity of subordinates. And when a new cardholder makes their first purchase, the manager should call them to verify the purchase. That will tell the employee pretty plainly that the card is being watched. We also caution people to be on the lookout for unusual and high-value transactions, and for business debit cards to monitor the checking account daily and use online banking to watch for unusual activity. Finally, just to keep limited funds in transaction accounts to cover debit card payments. And then the education and training component you'll see throughout this section, because employees need to know what to do if they lose their cards or the cards are stolen. The business is responsible for charges until the card is reported lost or stolen. There's a wealth of information in the toolkit about practices business can use to reduce the potential for fraud on cards accepted. Training is important. It explains how to use automated tools such as validation services or real-time decision support. It cautions merchants to get the authorization for the full amount of the sale. They tell you how to inspect the card and verify data matches, and also to consider upgrading the point-of-sale card readers to accept the new chip cards. Although the toolkit also explains that EMV does not directly address lost and stolen or card not present fraud. For instance, EMV does nothing to prevent fraud in the e-commerce arena. Turning to ACH, unfortunately, when a fraudster has perhaps seen a business check and knows the routing and transit number and the business's bank account number, they often switch gears and attempt to take money from that account using an ACH debit payment. So tips to combat ACH debit fraud include limiting ACH activity to a small number of accounts, to address exception items and make timely returns, and to use the fraud prevention services that banks offer, such as blocking ACH debit activity on all accounts except for one, to put an ACH filter that establishes criteria that your bank will then use to post or return ACH transactions, and then an ACH debit alert, which simply tells you when an ACH debit is going to be posted to your account. Combating ACH credit fraud is also important, and the toolkit outlines best practices such as adopting strong forms of authentication or added layers of security, to dedicate a PC that is only used for payment processing, that has limited administrative rights. That is, you don't allow web surfing or shopping or social media. I read one example of a small business that picked up some really nasty malware, and the fraudsters attempted to, infiltrate their bank accounts. And how this came about is that the bookkeeper was planning her wedding, and she was spending her lunch hour visiting wedding dress websites, and she picked up the malware that way. And unfortunately, that was the same PC they used for their bank accounts. So separating the bank PC from other work is really important. We also talk about the importance of dual controls, so that two people have to be involved in transactions for security reasons. We steer the small business to relying on their financial institutions for fraud mitigation services. We talk about how important it is to participate in information sharing services so that everyone can benefit from learning who the fraudsters are out there. And finally, that idea again of educated employees so that they're in the loop on what to do. To recap, here are some common sense practices that the toolkit discusses. And I'm sure that in most of your companies that are listening, these are things that you are already doing. But the point is made in the toolkit that fraudsters continue to evolve their tactics, so that, and we really need to do the same, because what we think is the best practice yesterday and today may not be a best practice tomorrow, because the fraudsters could have figured it out and caught up with what's going on there. And then we could not address everything we wanted in the toolkit. So what we did was we created a very robust resources section at the end of the toolkit, and that contains links to information on glossaries of payment terms, many resources on credit and debit cards, resources on ACH, including checklists of how to get started. We have general small business resources, including contingency planning resources. We have fraud and data security resources. There's a section listing each of the U.S. regional payment associations because they're distributed throughout the country and they are a wealth of information on payments that businesses can avail themselves of. We also touch on healthcare payments, and we have a list of the bank holidays because if you're going to be processing electronic payments, you need to know when the banks are closed so it doesn't so that the payments arrive when you want them to. So that's basically the content for today's webinar. I hope you found it informative. We are going to be updating the toolkit probably next year. So we're always looking for ideas on what other topics you think we should cover. If you have suggestions, you can send them to me, care of our shared mailbox address there. So at this point, I'm going to stop and I'll ask Sharon if there are any questions that came in from the webinar attendees.
Mary, there is one question. What is the key takeaway from this presentation?
Well, I think the key takeaway is that your smaller trading partners may not have time to learn about payments, and they may rely on checks as a result because it's sort of a fallback. So if you want to help move them along to more efficient payments, you may need to reach out to your smaller trading partners and offer them your expertise and encouragement to adopt electronic payments instead. And I think that leaves everybody better off, the larger corporates and the smaller trading partners.
Okay, Mary, there's no more questions for today. We are going to close today's webinar. I would like to thank Mary for taking the time to present to our group and thank all of today's attendees for taking the time out of their day to join us. Thank you all again, and we look forward to seeing you at our next webinar.